Hey everyone, happy Thursday, January 19th. It's about 11:30 on the West Coast, and it's time for another market update video. A lot of news to cover this week, so I wanted to make a little bullet point for you guys. First off, applications are up. We found out that applications up across the board, especially purchases up 25% last week. And the reason's as important is last week we had a nice little move down in mortgage rates. So that shows that mortgage rates come down, applications go up, more people in the market look to buy, which is good for all of us. Second thing, Bank of Japan, they did nothing last night. They were expected to do something. I know some of you might remember a couple weeks ago, they made some changes to their treasury system, and that had a negative effect on rates. Yesterday, they were expected to kind of to do the same thing, and they did not, and that actually had a positive reaction on the market, so that's good. Also, what we got yesterday was it had a big market mover and it made for a good day. Was we got the December producer price index inflation numbers, which is inflation not on the consumer side but the producer side, and that came in better than expected. So another sign that inflation's slowing. And here's another piece of news. So active listings are coming down. I know a couple months ago people started talking about a jump in inventory. That was just seasonal, like it always is. Inventory goes up when people want to move and comes down when people aren't. And this time of year is traditionally when there's not a lot of listings. So that is seasonal, and it has come down like we expected it to, but still the number is still quite low. It's about half of what a normal market would be, prior to the pandemic at this point. So inventory is tight across the board, across the country. Another important piece of news, we got initial job loss claims today, and they're still down. They were down more than expected. The reason that's important is the Fed is looking at these job numbers, and they're feeling very confident in their path right now. If they don't think they're costing people jobs, then they can continue to do what they want to do and continue to raise rates. What we know, though, is that a lot of these job increases are second jobs. So not a full-time work, but people getting second jobs making ends meet. So that's not necessarily a positive thing. And then the other thing, there's been a lot of tech layoffs that might not be showing these numbers because people get severance. So I know this morning, I believe Microsoft announced they're laying off 10,000 people. So just another anecdotal job loss that we know is there, but might not be showing up in the numbers yet. Another piece of information we get tomorrow is existing home sales for the month of December. And this report might come in pretty bad, and you might hear a lot about it in the news. Keep in mind, though, people buying houses in December are generally shopping for a mortgage in October, and October was when rates were at their highest, when they were at 7.37 or whatever. So not a lot of people, rates started to come down after that. But these people that would have, the things that will be affected in December's numbers would be people who are shopping at the very top. So where does that leave us? So last week we were at about a 6.07 was the average 30-year conventional rate according to that lender survey, and today we're at 6.11. Yesterday we got down to 6.04, and last night it looked like maybe we were going to tick down this morning to below that 6 number and have a 5 in front of it. But then those job numbers came out this morning and a couple other things, and we ticked up a little bit to 6.11 today. So still a lot better than the 7.37, but hopefully soon we could see it continue to come down. So the next thing I wanted to share with you guys is, where are we going from now? So like we talked about, many times, the thing we need to keep track on is inflation. As inflation comes down, we should expect mortgage rates to come down with it, but it won't be a straight line. There's going to be some starts and stops. So we're through these December numbers now. We already got January. We'll get those numbers February 14th, so Valentine's Day. So the reason, we should expect them to come down because the core it should come down a little bit, but shelter still, the shelter cost, the cost at rents in mortgages and stuff should still be going up. Like we talked about last week, it's a little bit of a lagging indicator. So we probably won't get too much movement here, not a big move down. And then in February, or the February numbers, which we get mid-March, same kind of thing. High shelter, we have a chance for possibly a nice little movement. But what else happens in February is actually happens in January. We find out about it in February. Is medical care costs get bumped in there, and they tend to go up at the beginning of the year the way they do their billing and their stuff. So we might see a little bump in inflation there. So that might wipe out some of the gains we would get otherwise. So again, maybe not a huge chance for a lot of positive gain. And then in March, that we'd find out in April, same kind of thing. We have a low core, high shelter. So the core number, this 0.3, is not a big number to replace, but the shelter one is. So kind of evens out. We should still see inflation tick down, but not at a huge jump. And then in April, though, so this one, May 10th, we would find out May 10th. that's when everything should be aligning. We should have a big core number here. There's 0.6 to replace. We should have shelter at that point. Should also be coming down like we've talked about. So maybe then and going forward, we might see a nice little rally. Again, lots of stuff could happen in between now and then to change this. The Fed obviously could throw a wrench in the plans and do what they do. But as far as for right now, that looks like maybe a date to circle on your calendar is May 10th. That's when we get past some of this stuff, and we should see maybe a little bit more of an increase in the speed of inflation coming down. So, that's all I have for you guys today. Keep in mind that, given all that, I think, like I said, I don't think we're going to, see a straight line. We're not going to jump straight down. We're going to have a little bit of start and stop, one step forward, one step back. As you can see, we've been kind of stuck at this 6% mark. Things don't want to go below it. But hopefully we break through soon. Besides that, if anybody needs anything at all, please let me know. I also started a YouTube channel. So if you prefer to watch this stuff on YouTube, I'll include it in the top right of the screen, and then you can also go through the email and get to it that way. But feel ahead, subscribe. That way you can not only get these videos, but some other videos I do about the markets and basically just things I find interesting for homeowners and people and stuff like that. So hope everybody's having a great week. Go 49ers this week, and hope they beat the Cowboys. And if you need anything at all, reach out and let me know. Have a great day, everybody.